Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Thursday, November 1st, and the markets managed to finish up about 1% today overall, which, was a positive because we've seen such a, troubling market the last couple of weeks. Not really troubling, but just a pullback, and you like to see some type of stabilization. We finally got that the first of the month after a long weekend due to Hurricane Sandy. And just good to see an up market, right? Well, I have a few levels that may matter, and going into the election you may want to pay attention to. So first things first, I want to look at 1409, which is the point of control for the month of October, So realizing that we gapped above those levels, or right at those levels today, and just continued on, that was a positive, and that's something that I think that you want to see, and you want to see from now on up until the election, 1410 be support. So right now we are at the 20-day and the 50-day moving average. They're about on the S&P. But overall, I think this market looks good going into the election and the jobs report tomorrow. So just keep that in mind, that we do have some economic news, but things look good, and for trade, things are working to the long side right now. So let's continue on. The NASDAQ, you're looking at the point of control for the year for a target, and that's another 25 points higher from here. So about 1% of more upside for the NASDAQ before you even have to question some type of resistance. On the opposite side, the Dow, now this has cleared the point of control for the year. So the S&P is above the point of control for the year. The NASDAQ is right below, and the Dow is right at / above. So overall, I think this looks pretty good for the market as long as we can hold these levels. The Dow, the 200-day, the S&P 1400, the NASDAQ, let's see where we got down to. Let's call it 26.25 or so. I'm going to subtract this tail and look just at these lows here, 26.25 on the NASDAQ futures. That looks pretty good. And the Russell, just a nice little pop to the upside, back above the point of control for the year. Let's see if the 200-day moving average can hold. We didn't close one day below it, so that's important. That's what you want to be paying attention to and really apply that to your trading. So let's go right into some stocks, because I think there's some names that look like they want to move to the upside. First things first, metals and mining. Just continues to drift higher off this 50-day moving average. Now it looks like we have a little triangle pattern, a big update today. We'll see what tomorrow brings with the jobs report, only because we've been, the market's been closed other than yesterday, but for the last, it was 4-day weekend, let's call it. And, you're just seeing some money be put to work. But with that said, it looks like you have about 4% higher on metals. The first thing I look at, Pan American Silver, talked about it today. The only thing that's troubling to me is that we don't have higher than average volume. Now, with that said, we're at the point of control for the year, and we're moving higher off of those levels. I don't even think that these levels right here are a bad place to get involved. A stop right around 21. So realize that you do have a pretty decent stop, but you also have a target of around 25, 26 to the upside, in my opinion, and I think that's pretty good. Earnings coming out in about a week, so you do have some time, maybe a run up into earnings, and it's just something to be aware of. Ford, let me delete these drawings. Now this one, I was looking for some potential downside, but overall the point of control for the year was the whole idea, right? You have big volume that petered off around $10, and big volume at $10.45. Guess what? Earnings come out, we pop above. I think this has more room to run. I think the Bernanke effect is in motion right now, and you're seeing money being put to work. Honestly, this could run another 75 cents or so before you run into any trouble, theoretically speaking. And I'm just looking at that. I'm looking at the value area high here. I'm looking at where it last had trouble, and it was support, then it was resistance, and then a big move down, so you're looking for some type of retracement there. I think it looks good, Now you're late to the party, but you're having big volume come in, and that's what you want to see. Now Starbucks announced earnings tonight, is trading up towards $50, so keep that in mind. But this is a name where you can look in hindsight and say, you know, off the value area low, where you've seen buyers before. Remember, Starbucks overall is a value play. We've come a long way from the highs. This was a recipe for a move higher, and I mentioned it, I think, in the weekend update, and I just think it was something to pay attention to. And now the buyers got paid for it. I do think that in any pullback below 48, it's going to be worth picking up if you do get that opportunity. IBM recommended this off the value area low, the year-to-date value area low, that is. And we bounced right off those levels, continuing higher. $200. I don't see a reason for it to stop until we hit those levels. Sure, we have the 200-day right here. Sure, the 20-day. Sure, the 50-day. All in this cluster, but let's call it $200. And I'd like to think that this is going to make a push up towards that level. And, we do have a huge gap from earnings, and that's up towards 210. So at the end of the day, if you had a chance to buy at 190 for a move up to 210 and you missed it because you thought it had more downside, remember, IBM's a value play. And realizing that you want to be buying the major dips on these value plays, it gave you the opportunity, and now we're turning back to the upside. On top of that, you had a huge flush out in volume, 3 big flush out days, and then just a whole bunch of average volume days. So keep that in mind also. But IBM, I recommended it back around 192, and it continues to work. So stay on that train. Apple continues to hold the 200-day, definitely underperforming, but light volume today. Just keep in mind, we are in a downtrend, and you need to realize that. But the last time the 200-day moving average was hit, I'm going to zoom out so we can see it, was back when it was at 363, and that was the only time it was hit and made this type of move. I'm not necessarily saying it's going to do that again, but just keep it on your radar and realize that there are a lot of negative people out on Apple, and if they are short, they're probably going to get squeezed if this market continues. So just keep that in mind. Caterpillar recommended this back at the lows here, sub 84. Now you're getting paid off for it. I really don't think you want to sell this yet. I think you want to let it ride. You're seeing some good buying coming in. 2 days in a row up. I see that this is a red candle, but it was actually an up day considering the gap. It just gapped in crap but held the gap. And now we continue up today. So let's see if this can continue going. It's already announced earnings. I'd be looking up towards mid-90s for your first target. And the reason why, you have the 200 and you just have some general resistance at those levels. But this is a name where I zoom out a little more and I see something that's just been consolidating. Here's where it's been right to be a buyer. Here's where it's been right to be a seller. Do you want to be a buyer or seller right now? Okay, so let's focus on the buy side of things, and until it proves us otherwise, which it's not right now, price action showing us the buyers are coming in. Let's be a part of that and let's make some money. Triple M, 3M, right off the point of control for the year. I mean, textbook bounce here. You place your stop under these swing lows and you look for a gap close or pretty close to it. It's just one of those plays where it could work out. Maybe you have resistance at 90, but then again you have gap close around 92. So any push around 92 is worth it. You have about a 1.5 to 1 risk reward, or reward to risk ratio. So it's not wonderful, but you could see some type of retracement at least to the low 90s. Intel continues to bounce. Let me get rid of all these levels, all these drawings, I should say. I've been talking about this for the last couple of days. The main thing is right off the point of control for the last 2 years, and we continue to see really good volume. So realize what's going on here. The point of control for the last 2 years, the heaviest traded volume price for the last 2 years, and now you're getting a bounce off those levels with huge buying volume. Keep that in mind and realize that this is what bottoms are made of. And this is what you could see a nice retracement of. Look at the move we had. We had a move from 19 up to 29, a $10 move, and now a retracement. Well, guess what? There's a likelihood that we could go see the mid-20s again and there's nothing wrong with it. It's just the ebb and the flow of the stock, and you want to be a part of it. So take Intel, put it on your radar. You know, it's not a bad idea to look into these stocks, and if it fits your thesis, then I think you go for it. Unitedhealth. Now this is off the 2-year point of control, but I'm really looking at the 1-year chart, and what I really see is connect the lows. I mean, you can do a flat top here, but I see connect the highs, and you see a triangle pattern that's waiting to break out. You put a stop below 54, which isn't that much risk on this slow mover, and you see where it goes. It could take a nice trip to the upside. Keep in mind, jobs report tomorrow. Keep in mind, election. But we're above the 200-day. We're above the 50-day. We're above the point of control for the year. Not great volume today, but you have your risk defined. So you can place half your risk below these levels, half your risk below 54, and you just see what it does for you. ConocoPhillips, I've talked about this for a while. I mean, this is what I have to say about Conoco. You zoom out, and I'm on a 3-year, 2-day chart. Is this a squeeze or is this a squeeze? Get long these names. It's screaming to get long. Just realize what's going on. Manage your risk appropriately. But this is something that's paying you over a 4% dividend just to be long, and it's showing you it's about to break out. So you're starting to see good volume coming into ConocoPhillips. Take advantage of it. Realize that there's money coming into the market here, and you're likely to see more upside. So I do think this is good. Similarly, EMC, above the point of control for the year. Huge volume coming in right now. Huge buying volume. Zoom out a couple years. What do you see? I see a consolidation pattern. I see, let me get it. I see the lows, and I see the highs. And I see that it's probably going to go up to test the mid to high 20s. You know, not a big deal for this slow mover. But then again, with this volume here, maybe it's ready to break out. Maybe this is the end of the multi-year sideways consolidation. And instead of 30 being the ceiling, we're going to go see 35. And at $25, that's not too bad of a price. So just keep that in mind, that a lot of these stocks look really interesting. You had a huge multi-year rally on EMC, multi-year sideways consolidation. Now what do you expect? You expect a breakout. This is what stocks do. Take advantage of it. Ride the wave. Let it bring you profits. Morgan Stanley. Notice, I'm looking at a 3-year chart here. We have point of control for the year right at these levels. This is what I'm saying. You have your highs. You have your lows. If this is in fact a breakout on this mini scale, well, considering we're above the 200, considering we're above the 50 and it's trending higher, there's a likelihood that Morgan Stanley could go up towards 21. There's a likelihood that Morgan Stanley could push up towards 24, 25. This is a $17.60 stock. Now I realize you really need to, if you want to stay involved, you should probably keep half your risk right under these swing lows around 1680, and then half your risk below, just below 1620 or so, or around 1620, to really be involved. But you're getting good buying volume. You're looking at the XLF. The XLF continues to work. Bank of America, up 4% today. Point of control for the year. I mean, we're blasting off of these levels, and you're seeing just a continuation to the upside. Now, I know we have a bit of a skew because Monday and Tuesday the markets were closed, and you know we could be a little lopsided. I know it's right before an election. I know it's right before a jobs report, but these charts look good, and the fundamentals, you know, the earnings may not be there, but the fundamentals are starting to turn. You know, take Starbucks. They raised their outlook, and they raised their and they beat earnings. Look at the S&P. And all I'm going to do is point out the fact that I'm going to bring this chart here. Alright, point of control for the month. Shifted. Point of control for the last 90 days. Support. Where are we now? We're at the 20 and the 50. If this thing continues to go, we have some short covering that has to be done. We're going to see a push to the upside in these markets. And I want you to be a part of it. Hopefully you've been catching it the last couple of days. I've talked about, wrong chart, I've talked about Caterpillar, up 5% or so in the last 2 days. I've talked about Intel, up 3% today, probably 4% or 5% in the last couple of days. I talked about Pan America Silver today, this morning before the market opened. I have been saying keep Ford on your radar. ConocoPhillips, how many times have I mentioned this? And they're just now starting to work. All of these charts look really good. Now, it could be a fake out, but it just looks like something that you want to be a part of. So make sure this makes sense for you. This isn't a recommendation to go buy blind, but just take into account that, you know, maybe things aren't as bad as we think. Maybe this QE thing will work out a bit, the money flow, whatever. After all, where are people going to put their money? I don't, whether it's fundamentally right or wrong, I don't care. I want to make money, and these charts are pointing to more upside. So just look at your charts, define your risk, and make your trades. Long or short, it's up to you. But right now, I'm thinking this market wants to go higher. So with that said, keep in mind the jobs report. Keep in mind elections are right around the corner. But then again, after that, if the market likes what it sees, you have an end-of-the-year rally probably into the fiscal cliff situation. And then, of course, the beginning of the year where we always like to see money being put to work. So anyways, take care. Have a great night, and I'll talk to you this weekend.